Good morning, everybody. Welcome back to the Schwab YouTube coaching channel for the Wednesday edition of Trader Talk in today's market. I'm your host, Kevin Horner, joining you from a traditionally beautiful Denver, Colorado. Today, as is often the case on a Wednesday, joined by my friend and fellow Schwab coach, Brent Morris. Good morning, Brent. Good to see you.
Hey,
How are things?
good here in the Salt Lake area, Kevin. Glad to be here. Got some extra people today with us. Welcome to all the newcomers today, and just looking forward to talking about what's going on in the markets with y'all.
Yeah, as am I. Yesterday, Brent, was kind of one of those crazy market days. We had
Yes, it was.
quite a bit of volatility, some movement to the downside that was aggressive, some bounce back in the afternoon that was equally aggressive, maybe not as aggressive as some of us had hoped, but nonetheless, we rallied back, and it'll be interesting to see some of these levels that we may have achieved. This morning, we had, of course, a data report. We heard the CPI detail, and we'll talk a little bit about how the market reacted to that as well. So take a minute, everybody, to say hey to our friend there in the chat. It looks like we've got Barb Armstrong
Connie.
here today joining us. Excuse me, it's Connie Hill in the chat this morning.
Yeah,
I'm sorry.
Connie.
So say hey to Connie today for us, everyone. You can rely on Connie to answer comments and questions that Brent and I are unable to get to. But of course, we're going to try to keep an eye on things for you there. And if you're not already doing so, you can follow us coaches on X. We're all there. Try to post for you either charts or some interesting data points, news of which you might want to be aware. You can follow us all there on X. Connie Hill, CS, Brent Moores, CS, and Kevin Horner, CS. It's a great spot to find us when we're not hosting classes for you here. So, if you're not already subscribed to the channel, make sure you subscribe to the channel, everyone. Let us get to our disclosures and we'll jump to the charts. So, as always, remember that everything we discuss today should be considered informational and educational only. We do not make recommendations nor any endorsement to any endorsement for how to trade the market specifically. What we are offering up are insights, strategies, particularly as it relates to technical analysis in terms of developing a plan and a process for yourself. But everything we offer are just ideas, insights. Remember to customize your approach to your liking. Now, technical analysis can be one of those decision-making pieces for you, but it should not be the entirety of your decision-making pieces. So make sure you're utilizing multiple data points as you make your buy and sell decisions. Now, if you are new to this particular class, which is really more of an analysis of the market and an incorporation of what's happening with the day-to-day movements of things, what we try to do as we do that is to discuss the technical analysis view of the areas of the market. We start broadly with our S&P 500 here today, and then we're going to work through the major indices, some industry groups, and sectors on the move, along with stocks that might be in the news today. So, with all of that said, Brent, we've got the S&P 500 up, and as you can see, a pretty significant tail there yesterday, kind of defining our early sell-off, Brent. And I'm guessing that a lot of us are going to call out the fact that that low coincides with the 50-day moving average. But what do you take away from such a significant tail like we had yesterday here?
Well, I mean, yesterday was a huge roller coaster, Kevin, and we opened up a little higher even, but midday it was just looking terrible. And then by the end of the day, we had recovered most of it actually on the S&P 500. A lot of that was driven, well, we'll see when we look at the NASDAQ, but it was driven by just some of the bigger names, like bigger mega cap names that really drove it in IT, information technology. But from a technical standpoint, I mean, the good thing is, even though yesterday was not a good day overall, the good thing is we actually had a nice recovery and we were well off the low. So we kind of tested that 50-day moving average, rejected it, and came back up to closing where we were a couple days prior. We'll see where today goes, but maybe a little bit of a glimmer of hope, despite the fact that it's not that bullish of a chart at all.
Yeah, unfortunately, it's not. The takeaway that I heard yesterday in my afternoon class, as I was setting the table for that discussion, was 2 days in a row running into the 20-day simple moving
Yeah.
average up here, and on a daily chart that can be a little difficult to see. And so I always encourage traders to kick back into a 15-minute bar or maybe even an hour-long bar to really get a better snapshot of price action over the most recent period. And you can see that on our way lower, Brent, and we really shouldn't be all that surprised. We've just made lower highs, lower highs, lower highs. And so some of that stuff still plays out over the course of our watching of the movement here, of course. And I think it's just easier to see some of these moves over a longer term window, but in an intra-period basis because we get more candles to work with. And look at that low we had yesterday. We had this gap from May 6, I think it was. Yep, May 5 into May 6. And that's exactly where we fell to and then got a bounce. Now, that doesn't mean it has to hold up, of course, Brent, but it can be instructive for us if we're trying to fine tune our understanding of the trend.
Yeah, the two most kind of key things that people look at typically with technical analysis are number one, the trend, and number two, support and resistance levels. And by using this short, you can do that both with the longer term chart and the shorter term chart, but sometimes you get a little different view when you change your time perspective. You already talked about that trend there. We have lower highs and lower lows that we've seen. That the technical analysis that you use can be used on any time frame. The same principles, trends, support and resistance, things like that can be used on any time frame. And in this case, we have that downward trend, lower highs, lower lows. We also have those support levels that you can identify. That we'll see if that holds. The trend, something's got to give. Either the trend's got to give or that support level's got to give because they're coming to a collision course here quickly.
That's a great way of putting it, a collision course. When we have so many of these details coming together, lining up, then we get bigger swings one way or the other. So, of course, if nothing else, Brent, on the daily chart here, or rather the intra-period chart using 1 hour bars, I think a level around 7,300 is well established for support, under which we have a greater likelihood of going lower. And so traders might get defensive in a short-term basis, which is to say under 7,300, they might start building more cash, shrinking the position sizes of their long equities that are exposed to the SPX, for example. But until that occurs, right now at least, they feel like they've got a level that they can base those decisions on. And as we rally a little bit here, we had a week open, relatively hot CPI figure with numbers coming in the highest we've seen in 4 years on a year-over-year basis, and yet 3 years, excuse me, and yet the market might have already seen some of that digestion. I almost wonder, Brent, to what extent that was predictable in our expectations, and then you've got the market selling off in advance of it, and then traders just say, well, okay, it was kind of in line with what we really thought was coming, so spike down, buy the dip, essentially.
I don't think anybody was surprised by the CPI report, Kevin. And we have PPI tomorrow, but inflation right now is huge on people's minds. I mean, at different times in the market, in different years, there's different economic points that are of concern. Right now, inflation is of huge concern. 10 years ago, I mean, it's always somewhat of a concern, but it certainly wasn't in the crosshairs at that point. And so right now, I think it's on everybody's mind, and I didn't hear many people expecting a big surprise on the good side for the inflation report. So that's priced in, I think, to a large extent. And I'm not sure any change in the market that we're seeing today is really driven by that inflation report at this point.
I think that's fair. I think that's a fair suggestion. Brent, one of the things that's really developed of late has been a decoupling with oil. Like suddenly, oil's movement is not tied to what we're seeing in the broad market. And I wanted to bring that up here briefly before we move on to the Nasdaq. But let's take a look at the crude light contracts here. We're using the future symbol, though we're not advocating for futures trading in any way. What we're trying to do is just get an idea of trend. And the big thing here, Brent, I can see two things. One is the broken down uptrend line that is now resistance for us because we've been below it for 2+ weeks, and the 20-day aggressively down sloping. If I kick this into just the 20-day, you can see we've been below it now since basically the 21st of May. Is that the new trend in the short run? It seems like this is not having the impact on our broader markets that we were used to for 2 months.
Yeah, no, I mean, and you can see the downward, the lower highs. You can see the support level, and I noticed a couple points in the chat, different views. People are bringing up. On one side, price of oil is about to explode. On the other side, Sam said, Art Berman, oil analyst, says we may have topped out on crude. There's enough workarounds and demand destruction for it. And so, two vastly different narratives on that. That's why we use the charts, is to try and help us. And we do this on a lot of things, not just oil, is sometimes we don't know what to, one analyst says one thing, another analyst says another thing. We're using the charts here. And right now we've seen, the pullback closer to the support level on this crude chart. And obviously oil is a big factor. You mentioned the CPI report. There's a big difference in the CPI report that we saw between core CPI and the overall CPI report. Remember, the core CPI strips out food and energy costs. And so oil is a huge factor there. Obviously, with the oil costs being factored, that it means, in fact, let me just look. The actual year over year CPI was 4.2%, whereas the core CPI was 2.9% year over year. That's a big difference.
It is.
The challenge is the higher oil stays for longer, the more the overall CPI can bleed into that core CPI, because oil prices don't just affect oil, they affect other things eventually too. It just takes longer sometimes for the oil prices to really bleed into the everyday other products that we buy via shipping or just petroleum costs and products or whatever. But the longer oil stays elevated, the more that's going to affect it. So it's all tied together, this oil chart that we're looking at, and CPI and what the market's doing, sometimes just not in the short term.
I think that's excellent context, Brent. I'm really appreciate the color you offered there, and I think the reminder might need to be that, Brent, when the market reacts, one of the ways the market's going to react is to the concept or the belief that things could have topped out, which is to say they might not be going lower immediately, but if oil prices are believed to have topped, well, then in theory everything thereafter should be disinflationary moving forward. And so even though we have data to suggest inflationary environment, that does not, the way the market's going to look at that is forward looking, which is to say, okay, well, this is the worst we expect it to be, therefore going forward it has to be better. We can believe in that and we can buy up the market on that, Brent. And that's the kind of way the market works, because 80+% of the time the market is in uptrends, bullish market moves, etc. And we just tend to focus on a day-to-day basis on a lot of the negativity that doesn't necessarily shift trend.
Right, absolutely. And so, you get a little more volatility with that. And of course, the headline news, what's coming out of the war, for example, is obviously going to move the market some. Although after a while, sometimes you see some news and you go, oh, that's terrible news, and the market isn't really reacting that much to it because it's like old hat. You don't expect,
Yep.
and like, for example, I think it was yesterday, the president said that his expectation is there'll be some deal in the next few days. Um, and I think we've come to see that the Middle East, well, look, ever since since before I was born, people have known the Middle East is a tough place, um, and there's a lot of volatility out there, and so
Yes.
I think you got to take any sense of hope of resolution. And I don't want to sound too dire here, with kind of a grain of salt, in the sense that I don't know, it's been dragging on, and I'm not sure we're seeing a quick resolution here.
Yeah, it seems like the playbook is a headline about how well talks for the continuation of
Yes.
ceasefire and the ending of the conflict are going, followed by, yeah, that's not the case. Followed later on, a day or two later, by, yeah, things are going great, and this is coming to a conclusion. And so, yeah, we feel as traders like we're getting pushed around quite a bit on a day to day basis. And it's a good reminder that a lot of that day to day headline stuff, no matter what market we're in, is noise. And it's the
Yep.
broader, longer trends that we are probably better off paying closer attention to. Brent, I shifted us over to the NASDAQ 100, where we had a very a very similar move to the S&P 500 yesterday. Big tail down, a big downdraft.
Yep.
If I put the 50-day on this one, you'll see we're further away from it. And then on the hourly bars, you'll see that we've basically set more or less the same approach, right? We're below our short-term indicator. The trend indicator, in this case on the hourly bar I'm working with, is the 100 period simple moving average. And since we broke down from there, it's been lower highs, trying to see if we can start getting into gear again. But everything that I said, kind of relative to the SPX, really holds water here in the NDX too.
Yes. And so the interesting thing yesterday, looking at the market yesterday, especially towards the end of the day, was if you looked at a heat map, uh, the tech sector was like all red, bright red, and everything else looked pretty good. In fact, if you pull up the S&P 500 equal weight here, Kevin,
Sure, we can
look
do
at
that.
what yesterday's candle looks like on the S&P 500 equal weight index. And yeah, if you go to the daily candles,
Wow.
it was a nice big green candle.
Yeah.
Most of the stocks in the S&P 500 were yesterday. You would never know that looking at just the normal daily candle of the S&P 500, or the Nasdaq for that matter. Is that it just showed there was this bifurcated market yesterday, and we've seen this before, but really it was to an extreme yesterday, where it was a kind of, in a sense, you look and go, oh, this is a bloodbath, but most of the stocks were up in the S&P 500 yesterday. But there's a reason why we don't just always use the S&P 500 equal weight,
Yep.
and that is the market is dominated by these. It's a mega cap market. It's a big company market that really drives things. And so that's what we pay attention to. And that's what sold off. You can see that in SPX. You can see that in the NDX as well here.
Yeah, absolutely. I am, when I look at the equal weighted index here, Brent, I think I gain more confidence in what the market is up to. It seems to me to make more sense because, and we're going to see it here momentarily, everybody, we're going to look at the sector performance and the rotation that seems to be underway here. But Brent, it's a healthy market that is taking money from the explosive tech moves and
Yes.
applying it to the lagging groups like your staples, like your healthcare, maybe financials, etc., that have been lagging on a year-to-date basis. That's a positive, though, for the market, broadly speaking, because that money is not leaving the market. It is going to those laggers instead. That should give us a little bit of confidence, shouldn't it?
Yeah, you get a rotation. Look, it's better than if like everything we're doing really poorly. That
Yeah.
one of the I don't know, the things that you have to deal with if you buy and stick with the, NASDAQ tech type stocks, is volatility. It's just part of the game, so to speak. And you're going to see more volatility. And volatility isn't bad. But necessarily, it just means you get bigger swings. Sometimes those
That's
swings are up, which are, it's wonderful when they're going your way, but sometimes they're going down against you, and you see a day like yesterday.
Yeah, and the reminder from me is going to be pretty consistent. If you're here frequently, you hear me say it all the time. The best approach that we traders can take is probably one that leans into trade management. How do we handle our own positions, properly owning the right amount of dollars in a certain area of the market or a certain trade of the market? That should give us the confidence to weather the volatility we've experienced, and that might be more important than what the trend could be for each of us. I mean, evaluating the trend takes time. Getting good at it takes even more time. But we can all be good with managing position size based on how we have comfort for it, for tolerance for risk, and so on and so forth. I think it's a big part of it. And if you master that in advance of trend analysis and technical analysis broadly, I think you're a step ahead of the game if you can manage it. Now, Brent, I've pushed up here the Russell 2000. The low yesterday seems to hammer the 50-day moving average right on the nose, and then we rallied off of that pretty effectively. Russell has been a bit of an outperformer for us a little bit, and we've noticed that we got pushed back as well here in yields. So I'll just highlight the fact that the yields got into the gap zone and have come back a little bit. We really ultimately want to see it back under 4.5, but we're going to talk about that in a moment. I wanted to get your thoughts on the Russell 2000, really the trend we're seeing here.
Well, look, I mean, the pullback that we've seen over the past couple weeks on this isn't that different than the pullback we saw in May. And we've seen pullbacks before, but the general trend on the chart has held up. We maintained the 50-day. Yesterday, we kind of got there pretty close to it, but we bounced right off our support level. And so that's what we had hoped, I guess. If you're a bull, that's what you'd hope for, is along the way, you're going to be tested. Along the way, you're going to hit the moving average or support levels. Markets, just like individual stocks, don't go straight up. And so in general, I would consider this to be relatively bullish for the simple fact that we've gotten higher highs and our general trend is up, including that 50-day. Now, you look at the RSI at the bottom of the chart, we're getting a lot of lower highs on that RSI. But, so a little bit of a divergence there. The RSI is going up. The index itself, I said that wrong. The RSI is getting lower highs while the index is getting higher highs. That's kind of a classic divergence on that. Some traders will view that as kind of a little bit of a red flag, but boy, we've seen it, Kevin, many times before where a divergence doesn't turn into a turnaround in the market. So again, I want to bank everything on a divergence indicating that the Russell's going to turn down.
Yeah, divergences are tricky, right? We see them all the time. Often they mean pause to the trend, not reversal of the trend. I think that's the biggest takeaway, but we traders tend to lean into the idea that a divergence means that we have to do something aggressive the other direction. And that's just not the case. Could be something that works itself out over a small window of time, right? We just let time pass and we can work off a divergence. Brent, we got to talk about those yields though, because I think this is where we have a pretty significant shift and we need to discuss the expectation on rates because we've had, so I'm going to bring up the 10-year. I mentioned the 4.5 level, needing to get back beneath it if we really want to see, I think the Russell 2000 get stronger legs. We're going to need the yields to come down. But Brent, it doesn't seem like that's where we are in terms of expectation. So I'm going to bring up the third-party tool here, the web page. It's the CME Fed tool, and it is the CME's page. But the couple of things about this. So obviously, this is a third-party document. It is not Schwab's, nor is this a way to look at what will happen, but rather how traders are positioned for what could occur. And Brent, the biggest shift here, as we see where we reside today, 350 to 375 is the current base rate, or the rate we're working with. And as we go down the chart, you're going to see for December, the end of this year, Brent, we have a greater likelihood, according to how traders are positioned, for a rate hike than we do a rate cut. In fact, it is 2 to 1 hike versus cut between now and the end of the year, and it might even be 2 hikes if you look at the 20%
Actually,
here.
Kevin, it's not, it's 2 to 1 hike versus stay where we're at.
Even worse. Yeah, excuse me.
And basically, and again, this is not a guarantee of the future. This is just how traders have positioned themselves. They're saying the odds of a cut by the end of the year are like almost insignificant there, according to this here.
Yeah.
So it is that's a very different narrative than what we've been hearing for a lot of the year, especially in last year. Last year we were talking about, when are cuts going to come? Kevin Warsh, going to be Fed chair. He's more going to be in line with Trump. And Trump has clearly indicated his preference for a rate cut. But that's not what the market's pricing in. And one way to think about that is this: is what the Fed does is they have this dual mandate. They want to keep check of inflation, ideally near their 2% target rate, and they want full employment. That means economic activity. Well, what we had last Friday, we had a jobs report that said employment is doing pretty good, actually. The labor market is pretty strong right now. What we had this morning, and of course, this isn't out of the blue, we kind of expected this and we've seen this before, is that inflation is a concern. Both of those narratives are pushing more towards what we're seeing on the graph here, on this chart here, more pushing towards the idea of a rate hike than a rate cut. So we're more likely to cut if inflation's not a concern. Well, inflation is a concern. We're more likely to cut to kind of spur the economy for economic growth. Well, the economic activity is general labor market activity and economic activities been relatively strong. So it seems a little, that's the macro narrative behind these numbers here.
Yeah, and it was something that has changed quite a bit over the last month as I highlight this, Brent. 1 month ago, May 8th, the potential for a hike, or excuse me, the potential to get a hike here from 350, 375 to 375, 400 was only 13%. And so, as you stated, the jobs report, hotter CPI, all of that detail leads to shifts in expectation regardless of narrative. And I think that's the takeaway here. There's plenty of individuals who think, as you said, that the administration could drive the decisioning here, and yet that's not how traders are positioned. And I think that means simply that we are more data dependent. We're going to continue to keep an eye on this stuff. Now, certainly this can shift. This is a great thing to keep a lookout for and monitor so that we have expectations, so we know what traders are really anticipating. But I think that's a very helpful discussion, and we try to bring that one to the table here periodically, of course, as is necessary with the rate environment. So we're going to keep an eye on all of that as we proceed forward here over the next days and weeks. So if you're new here, just remember, we do this class 4 days a week, Monday.
All right. Hey, so yeah, we do this class, everybody. It looks like Kevin has a little tech issue there, but we do this class, just a reminder for everybody. We do this class Mondays, Wednesdays, Thursdays, and Fridays. And Fridays is a little bit different variation of this class. We talk about ETFs, which we don't do during the normal week here on that. So just, make sure you check with us, stick with us, and check us out each week. It's each day that we're on and available. It's a great way to keep on top of the market. And I think we got Kevin back here. Okay. So
All right, Brent. Thanks for picking up my slack there. I evidently had another hiccup with my with my Wi-Fi. So what I wanted to touch on here was the semiconductors and our strongest space of the market, moving to the upside aggressively from April 1, having pulled back to this 23% retracement level. An interesting spot for it today, huh?
yeah. So again, remember those two main things. We look at trend, we look at support and resistance are probably the key things we look at with technical analysis. Well, we've come back down. Yesterday, intraday, we kind of broke below support level, but by the end of the day, we recovered that. That was, but where are we at? We're at a Fibonacci level
Mm-hmm.
off the highs. That is one way of looking at support, which is pretty close to where we had our last higher, well, a couple higher highs ago was, and
Mm-hmm.
that's a potential support level as well. So that's kind of a key level we're at. Are we going to hold? It can go down a little bit and still hold, but much further, we're breaking that, and that would be a bad sign, put it that way.
It would not be ideal. I went ahead and shifted us from the 50-day to the 20-day because that kind of stood out to me here, Brent. Was that, again, the significant tail below the lows yesterday took us all the way down here, and then bulls stepped in and rallied back above the 20-day, maybe giving us a little bit of confidence that we can maintain it. But that's an important spot for us now that we've tested the 20, because commonly we test areas of trend support, that being a dynamic moving average like the 20-day, potentially like the 50-day. And then when we break those shorter term areas, we commonly will find horizontal support to be where we gain the bounce. So there's horizontal support just beneath us here, prior highs. And again, prior highs can become, as former resistance, can become new support. So that's what I've drawn in here. The first layer and then a second layer, kind of coincident with the 50-day moving, the 50% retracement of that entire rally that we have seen. So, okay, Brent, let's talk about that rotation that's a bit underway here. I've got the sectors ready to go so that we can evaluate and look at
Yeah.
the charts of those, but I thought we'd start on the Market Watch tab so that we can get a view of the quotes page so that we can see how we've been doing over the recent weeks, days and weeks, that is. Okay, so for the last five, let's go to the 20-day basis here where healthcare, financials, real estate are your top, and energy, your top four on a 20-day basis. Brent, those are all generally thought of as really defensive in nature, are they not?
Yeah, they are. And so that's very different. But even IT's hanging in there. But the difference is with IT, we've just seen this huge volatility. In other words, if you look at a chart of like financials or whatever, industrials or whatever, it's like the it's kind of just going sideways and or up maybe just a little bit.
Mm-hmm.
Industrials went, not industrials, IT went way up and then way down, and we're ending up with a number that's not that different on the 20-day there. There, but yeah, that's kind of, you talked earlier, Kevin, about the rotation, and when we talk about that rotation, it's money goes somewhere. It doesn't just stay put. And if something falls out of favor, it needs to go somewhere else. And it seems to be going into some of these other sectors here.
Yeah, it sure does. And the reminder is once more that if we have trends shifting, then we can take advantage of those shifts periodically. So I thought we could quickly look at a few of these because obviously we're always looking for a better understanding of what's really working. Staples found the 200-day moving average, have moved off of it. Brent, commonly a 200-day is an area, especially when you're looking at things broadly as an index or a sector chart. This is a spot where traders want to deploy money, a longer-term trend line.
Yeah, you're getting back to the kind of the money management thing that you mentioned earlier here. And so have what is in place for you ahead of times in terms of your rules. But the 20-day is 200-day is could indicate, hey, we've sold off a little bit here, and maybe it's a little cheaper. Maybe it's an opportunity to get into Staples. Staples is the consummate kind of defensive type sector. And so, when money goes out of more risky assets, sometimes it goes into staples. And we've
Hmm.
seen a nice little bounce off that 200-day. So, I don't know exactly where it's going from here, but that support certainly is held, and we are now broken above the 50 and the 20-day moving averages as well.
We have, and we've seen, I believe this one here, healthcare has made a nice move itself. We've got shorter term moving averages crossing longer term to the upside, so the short term trend well developing here as we move into a maybe a different regime. One of the other things I can see here is having moved through what once was support right in here. So this was support. It could have been resistance, Brent, and we've more or less held that. So this has the makeup or the look of a healthy and improving sector of the market, as does I think the financials here, if I'm not mistaken. Did I get that right? Sure
Yeah.
did. And
Yeah.
financials, I've been talking about this because of the 50-day, but we got down and had to test horizontal support of that gap ledge before moving off of it aggressively here the last week or so.
Yeah, we've seen some strength there, no doubt. And so, so a lot of this is, money coming out of IT, perhaps, but also, and you see some other sectors, like if you go to communications, which has really done very poorly. But one thing to always keep in mind on these is, especially like in the communication sector, one stock can really dominate this. In fact, if we go to the heat map there, we can see that, Kevin. If we can go to just look at, well, you can look at communications from there if you want, or you can look there. You can
Yeah.
see, like, there's not that, the vast majority of this sector. So if you kind of consider this as a real estate, so to speak, think of how much of the area is taken up by Alphabet and Meta here.
Mm-hmm.
And you got Netflix with it some, but that's so just a couple stocks, just one stock, to be honest. If Alphabet has a big move, it really just pushes the whole sector there. So just be aware of that on some of these sectors. Some sectors are a little bit more spread out. In fact, most are more spread out than this.
Right.
But just keep in mind, not just because a sector is doing something, it doesn't mean every stock in that sector is doing that thing.
That's true. Entirely true. And it's very helpful to look within the space so you can get some clarity on just how important an individual stock might be. In the Dow 30, for example, one of the reasons we don't rely on the Dow 30 so frequently is because it is merely 30 positions, 30 stocks. We want something broader and gives us much more detail to work with and much better way to validate what we're seeing in the way of price. Brent, we had a question to check out Bitcoin, and I think we have to because Bitcoin
Yeah.
has pulled back to a very important level here. So let's talk about this. Again, we're using the future symbol, not advocating for futures trading, but just giving you an idea of the levels. Brent, I think if you are even an amateur at support and resistance, granted I've drawn in the lines, but I think it's pretty obvious where we reside here in Bitcoin on the daily chart.
Yeah, and that 60,000, when we hit those real round numbers like 60,000, 50,000, 70,000, those take extra significance when they correspond to a support level or resistance level. So 80,000, key level to break through on the upside if we were to get up to there. 60,000, key level on the downside. Will we hold? I don't know. But the one thing I would say here on Bitcoin is this. Bitcoin, obviously, those people who are bullish on Bitcoin have been very disappointed lately on this. It does appear that the downward momentum is slowing down. We had a lot of down days in a row. Now it's getting to be a little bit more mixed. We hit near that 60,000 level a few days ago. So far, we've been able to hold it. So the downward momentum may be shifting a little bit. Now, there's a difference between losing some downward momentum and actually having upward momentum. We're not there yet, but that's, I guess, the bullish case right now on Bitcoin.
Yeah, and that's about the best that you could say because
Yeah.
we are at support. If you believe that support can hold, then you have a proper maybe risk versus reward opportunity to deploy funds there if that's your goal. On a longer term chart, it's also kind of an interesting spot,
Yeah.
Brent. A lot of significance at this 60,000 level. Previous double top resistance that resulted in a pullback to the trend line. And again, resistance can become support. So maybe we're finding it here. And you've got the confluence of the uptrend line, the 60,000 horizontal level, along with the 200-week simple moving average. All of that confluence can mean one of two things, right? It can mean it's an excellent spot for support, and if it holds, traders are going to remain confident and enthused. But if it breaks, the second aspect of that is if it breaks, it's a significant development if it does break down because it is being watched by so many traders.
Yeah. Yeah, no doubt. And so it's hard Bitcoin is tougher than I'd submit than almost anything else we look at, perhaps anything else we look at, because the fundamentals that underlie it are a little less clear on a lot of levels to than looking trying to value a company or something like that.
Yeah, very, very difficult since there's nothing on which to base it, right?
Yeah.
So that makes it even harder. Okay, Brent, in our final few minutes, I wanted to hit a couple of stocks in the news here for everybody, one of which is in that healthcare space. Pfizer was upgraded at RBC. And, again, when we talk about that rotation underway, you're looking for opportunities to expose funds to maybe individual stocks in lieu of mutual funds or exchange traded funds that give you broader exposure to a group in lieu of one single stock. But this is an interesting spot for the stock itself. I mean, it's pulled back to its 200-day moving average. The stock had been under pressure for a while. If we go back to the weekly chart here, I'll just highlight that briefly. But as I said, upgraded at RBC Capital to sector perform from underperform. So they're basically just saying, all right, well, it should at least perform at sector levels, and they put a target on it at $25. So, Brent, the uptrend here still looks reasonable off of the lows, but there's a lot of overhanging resistance here on the weekly chart.
Yeah, a lot of overhead and resistance, and obviously so that's a 10-year chart. That's longer term. So we'll see. If the shorter term trend continues up, and we get continue those higher lows, we're gonna hit these points where we could potentially hit some resistance. So, we'll wait and see on that. But I think it's a good reminder to look at longer term charts for their implications in terms of support and resistance levels that you wouldn't see probably if you were just looking at, a 6-month chart or something. These wouldn't even be on your radar.
That's true. And if you've ever been to one of the in-person events, our friend Ben Watson loves to say, look left to confirm right. I like that same thought, but I also like the idea of stepping back from the chart and expanding to get a longer term view so that we can find the other areas that might be impacting shorter term price action. Believe it or not, these longer term trends will often provide short term resistance and or support. So it's imperative that we as traders look at as many of these as we can be. So one of the key details that I will take away from this is an upgrade in a stock that is, sure, 25% off of lows, but at the same time, in a downtrend over an extended period of time, RBC is kind of stepping into it a little bit here. So I always appreciate the analysts that do that before things shift, right? And we haven't necessarily seen a significant shift. The other one that I was going to touch on today is a downgrade, and it's on Nike. And Nike, unfortunately, this is one that I don't enjoy nearly as much, Brent. Hey, you've got a stock that's clearly been struggling, right? And if we put this one up on a year-to-date basis, we see it's down 30%, and we're hanging out at near lows, and they get downgraded at RBC. And it just makes me wonder, where have you been for 2 years? I mean, this stock you can downgrade it today, that's fine, but, it's been in a rough go for a while here. Why the downgrade after such a significant move? But they put it downgrade on it to sector perform from outperform, target of 50 down from 70.
Yeah, I don't know, Kevin. I don't even know what to say on that because it's true. I've followed Nike for a while, and the narrative, the kind of the fundamental narrative of them kind of losing their way and losing strength to competitors, losing market share to competitors, and has been that narrative's been around for a while. Couple more than a couple years at this point, and so it's a little surprising to me. And obviously, the stock price has acted accordingly. And so I don't know when it's going to return around, but right now there's nothing that looks very bullish on Nike, to be honest.
I will agree, but I do want to bring up, as we wrap this up, Chris is noting it looks like it might be building a base down there, and you could certainly say that for the last 3 months, having held those lows, that looks better, and you have an improving RSI, that looks better, but you obviously have lots of overhanging resistance, including a gap to pay attention to. So, all right, we are going to have to wrap it up there, everybody, but as always, we really appreciate you joining us, participating in the chat. It's a big part of what we do, the community of our traders and viewers on the shows here. So thanks for being here. Thanks for supporting each other. Follow us on X, Brent Moore's CS, Connie Hill CS, Kevin Horner CS, and appreciate the thumbs up down below because we get this reviewed and into our archive shortly thereafter. Don't forget to be subscribed to the channel. And last thing, everybody, if you're looking for a deeper conversation around maybe the options available to you, literal option trading, we have the virtual event going on right now, this evening, I should say, over the remainder of this week with our friends from the in-person event teams, Ray Kimbrell and Scott Durfee. So check that out on the calendar as well. And so thanks again, everyone. Have a fantastic rest of your Wednesday. We will see you all again real soon.